All right, so today we're going to take a deep dive into this interesting piece from The Motley Fool.
Okay.
And it's talking about three stocks that are favored by Warren Buffett's Berkshire Hathaway and saying that, these could be some good picks for your portfolio over the next 2 decades.
That's a pretty long time horizon.
That's a long time.
Yeah, but hey, that's how Buffett thinks, right? Long game.
Exactly, long game.
Yeah, so we got the analysis right here.
Okay.
And I guess our mission today is to kind of understand why these three companies, Amazon, Apple, and Domino's Pizza.
Wow, what a mix.
I know, right? That's the fun part.
Yeah, that's kind of an eclectic mix.
Totally, are being highlighted as these really compelling long-term bets, and specifically through that lens of, Buffett's investing style.
Okay, let's start with Amazon.
Right.
The article kind of jumps right in and calls it a surefire stock for growth over the next 20 years.
Bold statement.
Bold statement. And it seems like the core of their argument is just its complete dominance in e-commerce. They're saying roughly 40% of the U.S. market.
That's huge.
It's a big number.
Yeah.
But what makes that lead so significant, in the long run?
Well, think about it this way. With so many buyers already on the platform,
Right.
it naturally attracts sellers, right? They want to be where the customers are.
Makes sense.
Which in turn attracts even more buyers. It's like this self-perpetuating cycle.
It's like a snowball effect.
Exactly. A snowball rolling downhill, getting bigger and bigger.
Right.
And then on top of that, that size and that scale
Yeah.
allows Amazon to invest so heavily in their logistics, in their infrastructure,
Okay.
creating these efficiencies that are really hard for their competitors to match.
Yeah, and the article emphasizes that they're not just, sitting on their laurels.
Right.
They're not just coasting on this lead.
They're not complacent.
They're actively trying to not only maintain, but expand their market share.
Absolutely.
So they're bringing on new brands and products constantly.
Yeah, they even mentioned Estee Lauder and Armani Beauty just in 2024 alone. So you can see they're going after a wider audience, maybe even a more premium customer.
Okay, so not just, the everyday stuff.
Exactly, expanding those horizons.
Okay, and the article also talks about how they're really overhauling their distribution network.
Right, on both ends, too. Both how goods get to them and how they get to you.
So inbound and outbound.
Exactly. It's all about that efficiency, right?
Yep.
Improving delivery speed, keeping costs down.
It's got to be tough for competitors to keep up with that.
Absolutely. It's a huge advantage.
Okay, but now this is where things get really interesting.
Okay, me.
AI, artificial intelligence.
Right.
This is where the article really kind of positions Amazon as being, an early mover in this space of generative AI.
Yeah, and the scale of what they're offering through Amazon Web Services or AWS is pretty mind-blowing.
It's a lot to take in.
They've got these 3 service levels, right? You've got developer services for people who want to build their own custom AI models.
Okay.
Then there's Bedrock, which is more like a semi-custom approach.
Yeah.
And then they've got turnkey solutions for smaller businesses who maybe don't have a whole AI team on staff.
So they're trying to be everything to everyone.
In a way, yeah, they're recognizing that AI needs are going to be diverse.
Right.
So they're providing options for everyone, which is smart.
And the fact that they're constantly upgrading these services, adding new features,
Yeah, they're not standing still.
shows that they're serious about being at the forefront of this whole, AI revolution.
Absolutely. They're investing heavily in R&D, and it shows...
So they're not just relying on other companies for their tech.
Right. They're using NVIDIA's chips, which are, top of the line for AI right now.
Yeah, those are the ones everyone's talking about.
Exactly. But
Yeah.
they're also developing their own chips that are more budget-friendly.
Oh, so that's interesting.
Yeah, it's a smart move because it gives them more control over costs as AI becomes even more widespread.
Okay, so they're kind of hedging their bets.
In a way, yeah, they're ensuring they can cater to a wider market without breaking the bank.
And what's the impact of all this on AWS? Is it actually helping them grow?
Well, according to the article, their AWS sales growth has actually been accelerating.
Really?
Yeah, it became their highest growth segment in Q4 of 2024,
Wow.
up a solid 19% year over year.
So the AI bet is paying off.
It seems to be, yeah, early days, but the signs are promising.
Okay, so we've got this company that's dominant in e-commerce, leading the charge in AI.
Right.
But here's the thing. The article points out that Amazon stock is actually down 26% from its recent highs.
Interesting.
And its price-to-earnings ratio, which is kind of a way to measure how expensive a stock is,
Right, relative to its earnings.
is near its lowest point in over a decade.
So it's looking pretty attractive from a valuation standpoint.
It does, doesn't it?
Yeah, this is where that Buffett-style thinking comes in.
Right,
Buy great businesses at a good price.
when they're on sale.
Exactly, and Amazon might just be on sale right now.
Okay, let's move on to Apple.
All right, another tech giant.
The article starts off by reminding us that Buffett loves to invest in these strong consumer brands.
Yeah, he's got a history of picking winners in that space.
They even mention Coca-Cola as, another prime
Well,
example.
classic Buffett pick.
Exactly. And it seems like the iPhone is being kind of put in that same category. Like it's this globally valuable product that people just have to have.
Right, it's not just a phone anymore. It's almost like a status symbol.
Yeah, and the financials back that up.
Oh, yeah.
$395 billion in revenue over the past 12 months.
That's a staggering number.
And iPhone sales account for about half of that.
Unbelievable.
Just last quarter, they raked in $69 billion in iPhone revenue.
Setting records in several regions, too.
Yeah, so it's not just a U.S. thing. It's a global phenomenon.
Absolutely a testament to the power of their brand.
Okay, and the article talks about how Apple has delivered really strong returns to their shareholders over the past decade.
As you'd expect from a company of their stature.
And then they mention this thing called return on capital employed, or ROCE.
Oh, yes.
I'm not a financial whiz, so can you break down what that number actually means?
Sure. So ROCE basically tells you how efficiently a company is using its money
Okay,
to generate profit.
gotcha.
So a high ROCE means they're really good at turning their investments, whether it's R&D, new equipment acquisitions, whatever,
Okay.
into cold, hard cash.
And Apple's ROCE
A
is...
whopping 61%.
So that's good.
That's fantastic.
So Buffett likes that.
Oh, yeah. He loves to see that because it often means the company has this strong competitive advantage.
Okay.
Like they've got something special that allows them to consistently generate those impressive earnings.
So it's not just luck. They're doing something right.
Exactly. They've got a winning formula.
And the article also talks about customer satisfaction
Right. Apple customers tend to be pretty loyal.
and how that kind of feeds into the growth of their services segment.
Yes,
This
services.
is stuff like the App Store, their subscriptions.
Apple Music, Apple TV, plus all that good stuff.
Exactly. And apparently sales from apps and subscriptions were up 14% year over year last quarter.
So that part of their business is booming.
Yeah, and it's interesting because while the iPhone is still, their flagship product,
Right.
this services segment seems to be providing this more consistent and potentially higher profit revenue stream.
It's a smart move for them to diversify.
Exactly, and it's working. They're now generating $100 billion in annualized revenue from services alone.
With those higher margins, too.
Yeah, so it's not just about selling iPhones anymore. It's about building this whole ecosystem.
Exactly. Creating this Apple world that people want to be a part of.
So the case for Apple seems to be strong brand, impressive profitability, and this growing services revenue.
And let's not forget the Buffett factor.
Right.
The fact that he's made it Berkshire Hathaway's largest holding.
Yeah, that's a big vote of confidence.
It speaks volumes about his belief in the company's long-term prospects.
Okay, time for our final Buffett stock,
Let's do it.
Domino's Pizza.
Pizza time.
Now, this one really seems different from the others.
It is a bit more down to earth.
And the article starts by talking about how much Buffett likes those straightforward, timeless businesses.
Right, the ones that aren't going anywhere.
They've mentioned things like banking insurance,
Yeah.
BNSF, railroad.
Yeah, the kind of companies with a wide moat.
That's the term they use, economic moat.
Exactly. It means they have some kind of inherent advantage that protects them from competition.
So how does Domino's fit into that?
Well, the article argues that Domino's has built a moat of its own.
Okay.
Through its brand recognition, its reputation for consistent quality, affordable prices, and convenient delivery.
Makes sense. I mean, who doesn't like pizza?
It's a classic comfort food.
Exactly. And Domino's has really made a name for themselves.
And they've got the numbers to prove it.
Yeah, the scale of their operation is crazy.
Over 21,300 locations in over 90 countries.
That's wild.
It's the biggest pizza chain worldwide.
And their franchise model seems to be a big part of their success.
Absolutely. It allows them to expand rapidly without having to shoulder all the costs themselves.
The franchisees do a lot of the heavy lifting.
Exactly. They're the ones on the ground investing in their local communities.
Okay, so one thing that really stood out to me was their track record of comparable store sales growth, or comps.
Right. Comps are a key metric for retailers.
They've had 31 consecutive years of international comps growth.
Wow, that's impressive.
That's a long time to consistently grow sales.
It is, especially considering all the economic ups and downs we've seen over the past few decades.
Right, they've weathered pandemics, financial crises, all sorts of things.
A testament to their resilience and their loyal customer base.
Yeah, so what's the secret sauce?
Well, they've got a globally recognized brand.
Okay.
They've adapted their menus to local tastes while still keeping those core offerings.
So they're not afraid to experiment a little.
Exactly. They strike that balance between familiarity and novelty.
And they've really embraced technology to make their delivery process super efficient.
Yeah, online ordering, mobile apps, all that's been crucial to their success.
And they're not done growing.
Not even close. They added 775 new stores in 2024.
So they're still in expansion mode.
Absolutely. There's still plenty of room to grow globally.
So the pizza market isn't saturated.
Not even close. Pizza is a timeless classic.
And Domino's is in a prime position to capitalize on that.
They've got the brand, the infrastructure, the experience.
They've got it all.
Pretty much.
Okay, so to recap, we've got Amazon, the e-commerce and AI powerhouse.
Right?
Apple, the consumer tech giant with a loyal following and growing services business.
Yes.
And Domino's Pizza, the global pizza empire.
Quite a trio.
Each of them showing these qualities that Warren Buffett looks for in a long-term investment.
Strong market position, consistent performance, and enduring relevance.
And they're all highlighted in this Motley Fool piece as potential picks for the next 2 decades.
It's an interesting perspective for sure.
It really is. Makes you think about the long game.
Right, not just chasing the next hot stock.
But looking for those companies that have the potential to really stand the test of time.
Exactly, finding those businesses that will still be thriving 20 years from now.
It's like a fun thought experiment.
It is. So here's something for you to ponder based on what we've talked about today.
Okay.
What other companies or trends do you see out there that have that same kind of potential?
Okay.
That blend of innovation, brand strength, or reliable performance?
Like what could be the next Amazon, Apple, or Domino?
Exactly what's going to shape the next 20 years.
That's a great question.
I don't know the answer, but it's fun to think about.
It's food for thought.
Definitely.
Thanks for joining me on this deep dive.
Anytime, it was a good one.
Until next time.